Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about the recently filed, hot off the presses, adjustments that Tellurian is proposing to their both the 2027 notes offering and the changes to the 2025 convertible notes that are also proposed in the 8K that was filed today. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. And I'm going to emphasize all this that I'm not a financial professional today because this is talking in sort of some details of the notes offering, but I've read through and I think I have at least a bit of a handle on this, so I wanted to talk about it today. So let's go through this real quick and talk about what this means. So again, as I mentioned, these are proposed adjustments to the most recent offering that they just filed. I think it was last week. Sorry, I don't recall exactly. It was very, very recent. But this is for their 2027 notes that were paying 11.25% interest. They are proposing some adjustments here, right? And they call this out that this was in response to talking to potential investors. They don't give any more details other than that, but they do call that out. So, hi, Transient Stocker. Thanks for joining the stream. Let me know if you have any questions or comments as I'm going along. So this was a big one, and this actually goes down to what they're. You know what? I will just cover this first in terms of what they're proposing to do to their convertible notes rather than the 2027 notes that they're offering. I am going to first talk about what they are doing to the 2025 convertible notes that are already outstanding. These were issued a couple months ago, I think. Issued at 6% rate. They were for $500 million, if I recall correctly, and they made some changes here. Right, those notes were secured by their Tellurian Production Corporation, I think it was, or Tellurian Production Holdings. Right, so they're upstream oil and their gas production assets basically, and what they are trying to do, what they put in this filing today, is they are trying to remove that as the backing asset for the existing convertible notes. That basically is what it looks like to me, where they say they are trying to make it so that the convertible notes will no longer be secured by a pledge of the equity interest in Tellurian Production Holdings, right? And the reason why is so that they can use that as collateral for the proposed notes, the 2027 notes that are currently under the offering. Hi, Brian. Thanks for joining. Let me know if you have any questions or comments. So in order to get the folks who hold the convertible notes to, give that up, they are sweetening the deal for them quite a bit. So they're doing a couple things. Number one, they're going to basically buy out half of the outstanding principal of those convertible notes at a 20% premium, right? So again, they had $500 million, right? $500 million worth of convertible notes outstanding. And Tellurian is saying, you know what, we will buy back half of that, buy back $250 million of that, but we'll pay you $300 million to redeem that. They do call out a portion of which may be paid in shares of Tellurian common stock, and they didn't give any details there. And so right now we don't know. We don't know if a portion means a whole bunch or a tiny bit, right? We don't know. It could be that the portion is that extra 20% that this person would get back $250 million in cash and would get the equivalent of the remainder, that other $50 million in Tellurian common stock. We don't know at this point. I would expect these details would come out when they actually perform this transaction. So then they also are changing the conversion price, right? If you recall, previously they had a fixed conversion price for this, I think, or maybe it was I think it was a fixed conversion price based off of the what was it, the trailing 30-day. I think I'm getting my notes mixed up. I had it written down that this would result in it had to have been fixed, because I had it written down. It was converting into 87.3 million shares of common stock. It was effectively, I think, at a price of 4.78 or something, round about there. But they are proposing to change this so that it's just a premium based off the trading price of Tellurian, not to exceed $5 per share. So it sounds like this is going to be more of a floating thing for those folks. They didn't say what the premium is. I would imagine it's probably something like 10% or so, something in that vicinity. But I think this at least gives them the option to say, hey, if Tellurian is trading further down, we can actually convert into even more shares. But they're also giving them, and this is the bigger change, they are so that remaining $250 million worth of convertible notes that are convertible into Tellurian shares, they are giving them effectively a 20% bonus on that, right? And so this would mean that $250 million of outstanding notes that can be converted at $5 per share is effectively is $300 million of principal that will be converted, right? Even though it's technically, it's sort of weird to say that they're adjusting the conversions and they're adjusting all this stuff, but effectively what they're saying is you know what, that $250 million that you have, it's basically $300 million because they get this 20% effectively bonus. I'm calling it. If they convert, they're also getting, if they just hold it, they don't convert, they just hold it to maturity, they're also getting 120% of that principal paid back to them at the end of the lifetime by 2025. So that's basically what they're giving them as an extra 20%. Again, all to sweeten the deal so that they're willing to sign away the gas production assets, as Tellurian production holdings, as collateral. And then now these are just unsecured notes. And so this is all, again, so that Tellurian production, those gas production assets, can be used as collateral for the current offering, right? And so they say, so this is now getting back to the actual 2027 notes that are have an offering outstanding right now. They haven't actually done anything with these yet, but they're obviously trying to. They're obviously changing the parameters of the deal so they can close what they want to. Originally, those 2027 notes were going to be collateralized by equity in Driftwood. Now they are going to be collateralized by both equity in Driftwood and the Tellurian production, right? The gas production. So, and then they also said there's going to be a negative pledge on the assets of Tellurian production holdings. And if I understand correctly, again, not a financial professional, but if I understand correctly, that basically means that Tellurian can't use the assets of Tellurian production or any of its subsidiaries, etc., as collateral for any future debt that they would issue. So that is one change. They are also, this was interesting, an additional covenant that basically says when they issue debt in order to finance Driftwood, that the company can't issue any stock or anything that's convertible in stock, right? Any warrants or options to the folks who are actually providing that financing, which was a little bit interesting. I do not know quite how to interpret that. I don't know if that's good or bad. I guess to some degree this sort of implies that there's going to be potentially less dilution for the folks who are providing the debt. They're, Tellurian's not going to be kicking in any additional shares just to sweeten the deal for them. Probably that might mean that they have to issue it at a higher interest rate. It's hard to say. I don't know. Again, that's all really speculation. I don't have a strong opinion on what this in particular means. If you do, let me know, Brian or Transient Stacker. I'd be interested if you have any thoughts on that. Yeah, I'm not really sure. One of the things that they are also doing here is they're saying they're forcing, or as part of the provisions of the notes, Tellurian is going to have to actually set aside some money in order to pay the interest on those notes. And they say they're going to establish an interest reserve equal to 1 year of interest payments. It's unclear to me, and again, this would be just my ignorance as a non-financial professional. I don't know if this is something that has to be maintained for the duration of the notes, or if this is set up, at the very beginning and just at least has to make sure they can cover the first year's worth of interest. Again, I do not know. I mean, for long-term financial modeling, the kind of stuff that I do, it doesn't really make a big difference. But it is interesting that they may have to have some cash that's just set aside and is effectively dead cash uh, for a while if they actually have to do this for the lifetime of the notes. So they also have a provision about if there's a change of control. I don't worry too much about that. Use of proceeds didn't really change other than to say that they're going to set aside some of the money for that interest reserve, that I just talked about. But the rest of it is going to go to Driftwood. And then they have some other provision here, which is basically saying if somebody else gets gets even higher yield, somebody else who is financing Driftwood gets an even higher yield than what these notes offer, then they're going to Tellurian's got to pay, additional interest on these particular notes so that the folks who hold these notes are getting, an equal deal or something to that effect, right? The specifics are not listed here because there's a threshold rate. They did not disclose that here. So, it may be slightly different than the way that I described it, but that's sort of the gist here. But because we don't have those specifics, we don't really know. So that is the gist of this, right? And to kind of recap, right, Tellurian's going to buy out half of the existing convertible notes at a 20% premium, give them effectively a 20% premium towards a future conversion or future, payment at maturity. And in return, right, the holder of those notes is going to give up the pledge on the collateral of Tellurian production so that it can be used for the current notes that they are offering. So what does this actually mean for them, right? They are it's unclear because some of the specifics are withheld. My initial read on this is you do have to wonder, right? Why do they want more collateral for what they're offering when they're already offering both warrants and an 11.25% interest on these notes, which is, I think, fairly generous. Again, I'm not a financial professional at this point, but I think for out there in the market right now, that seems like it's fairly higher, and it's clearly much higher than if we want to compare, much higher than the 6% that the existing notes had. And again, these were convertible notes, so that's like an additional value that they got from these. But if they were able to issue $500 million using Tellurian production at 6% with some option to convert, and the current notes they are offering at a much higher percentage, and they are going to be collateralized by both Tellurian production and Driftwood holdings, right? And there is some value to those, right? Driftwood doesn't exist, but there's some value to all the permits, to all the plans, to the site, that I think is not trivial. And it implies to me, again, this is pure speculation, and I could very well be wrong on this, but they are now looking for a lot more collateral, right? I think Tellurian Productions was collateral for $500 million worth of notes at 6%. Driftwood itself has value, so that should add something else. They are looking at offering these notes at 11.25%. To me, it implies that they're looking for, a lot of money, potentially more than the $1 billion that we sort of thought they were looking for. And again, that was, even that number was sort of, I'm not going to say pulled out of thin air, because ostensibly somebody posted something from Bloomberg that showed that it was, that they were looking for $1 billion, but clearly this deal is not locked down. And since they're looking for even more collateral, seems to me like, there's a potential for this to be even greater than $1 billion. Could be totally off base there, but it like that maybe that's the bullish take on it, right? Is that they are sweetening the deal and giving them more collateral so that they can actually raise even the big pile of money that they want to raise. I guess the bearish take, right, if you want to be hugely skeptical, would be Tellurian had to sweeten the deal for these folks in order to get them to lend them any money. I think that's, in my opinion, that seems unlikely given the interest rate and the additional warrants that they're giving here, right? And there's value to all of that. There's value to all of those, right? But we don't really know. So Transient Stacker says, I just bought some TELZ a week ago, and so those are the Tellurian, I think, unsecured bonds, right? So cool, that's cool. And Transient Stacker also says a lot of confusion about this. Thanks for explaining it. Yeah, hopefully that helped. Hopefully that added a little bit of clarity. I did also try to plug this into my model, made a couple changes here, right? The net impacts here on the actual, doing the napkin math on the long-term value modeling here is basically there's slightly less dilution if you model the current convertible notes, right? Because they're buying out half of that in cash. Although there's an asterisk there, which is we don't actually know how much they might be paying in the form of Tellurian shares. And right now I assumed it was 0, but it could be, again, they say a portion of which may be paid in shares of Tellurian common stock. So we don't really know that. I have this here. I don't really want to go through it too much in detail today because there's so many unknowns with this. I'd rather wait until we do get some actual provision, some actual numbers here with both what's happening with the convertible notes and the final form of this offering, the final amount of the offering. That's when it will be, in my opinion, super interesting to model this out and see what's going on. But just quickly, what I did here for the modeling was with what we do know and trying to fill in some gaps with wild guesses, you would call it, not even assumptions, let's say. Slightly less dilution, but that they would have less of their current cash to use towards driftwood. Then I'm saying they would issue, again, I just put in $1 billion. I didn't put this in as something that I could change and take a look at what the impacts are. Although, again, I don't feel that I have a great handle on this until they finally give us all the parameters of this offering. But so they would issue the notes. And then, again, this is the way that I'm modeling out that I look at how much cash do they have overall available to put towards equity. This is from my assumed profits that they're going to make, and then subtracting off what they would pay in interest on those notes. And again, we don't know if some of that interest might be paid in Tellurian shares or not. We'll have to see the final deal. But then that means they still have to raise about $3.5 billion for the remainder of the equity, if I'm assuming they want to raise 40% of the final driftwood budget as equity, which would mean they have to still issue 767 million shares. Scroll all the way down. I'll skip through this again. I'm not trying to go through the whole thing today. But if I look at the net change for sort of the current view of the 2027 notes after today, again, filling in some gaps, versus my original model that I had published and walked through in sort of, I think, painstaking detail in that original video with this model. It does get us to sort of a current fair value or intrinsic value calculation, as I would see it, puts us slightly under $14 per share. So that is not a huge change from my original model. And again, I did actually try to model this out to where I can change this and say, hey, what if they raised, $4 billion instead from the equity right now? And they would end up actually, there would be a much smaller shortfall in terms of how much additional, common stock they would need to issue in order to get the cash to comprise 40% of the overall Driftwood LNG Phase 1 budget. And so if we did that, then that lowers sort of the intrinsic value just slightly. And so that is to say that, at least with my current assumption that they can issue shares effectively at $4.58, which is a huge assumption. I got that based off of the effective share price from the existing convertible notes, which maybe is a bad assumption because those are actually have collateral. But that was I use that just as a sort of anchor price there. But if we do that, then it does go down slightly. But still, we're talking in the same ballpark, right? $13, $14 a share of intrinsic value once they actually get all this locked down and have the full notice to proceed and all the funds in hand. So that is kind of my take on it. That's everything I wanted to go through today. I don't know if Brian or Transient Stacker, if you have any questions or comments at the current point in time, I will, pause there and see if there is anything. If not, then I'm gonna, I'll hop off. For anybody else who is watching this after the fact and not live, I do these videos usually as many evenings as I can, Sunday through Thursday, Eastern US time. I talk about individual stocks that I am either personally invested in or otherwise interested in, or that folks who comment on my videos ask me about and seem to have interest in. Tellurian is certainly one of my favorites. I've been investing in Tellurian for quite a while, and I've, as you can see, have some of my own models built in the spreadsheets that I use to try to value the company and see what's going to happen with the company, with stock. All right, just checking the chat here. Transient Stacker, Brian, don't see anything new from either of you. So I'll give it just a couple more moments, but then I'm going to hop off if I don't see anything else. Brian says, thanks, Dustin. Let's hope we get some clarity around this soon. Yeah, that is, that's why I didn't want to go through, some of these calculations in too much detail today, because there's just so many assumptions in it that, I actually brought up this picture. It's a quote. If anybody who works in, data science or anything related to it has probably seen this before, and probably many other fields. There's the quote of all models are wrong, but some are useful, right? And that's the way that I wanted to give that as a caveat that, clearly this is wrong. It's probably wrong in many ways. Hopefully some of the optimistic assumptions cancel out some of the pessimistic assumptions to get us to something that is hopefully close to reality. But, again, at least I hope that this is useful, right? Because I have there's a lot that goes into this, and there's so many guesses that I had to make in order to fill these numbers out. But yeah, I agree. To your comment, I agree. I really hope that we do get some clarity on this soon. And there's some days that I actually think if they just came out and said something very definitive of how they were going to finance it, even if it was, we're going to just issue a bunch of common stock at $4 a share, and that's how we're going to finance, Driftwood LNG Phase 1. There's some days that I feel like if they just came out and provided the clarity that, people would start to value the company more highly just because of the reduced uncertainty. Maybe I'm wrong on that because it seems like they could have already done that, but at the same time, I think truly and honestly, management owns a good chunk of the company, and I think they're trying to find the best way that they can do this for the shareholders. So as frustrating as it is to sort of feel like we don't actually know what's going on, I do think management has a plan. I do think they are trying to do this in the very best way possible. So, because they are shareholders themselves, not because I think they're doing it out of the goodness of their heart, but because they hold a bunch of shares themselves, shares and options, and they want the value of that to be maximized. And I think that they're doing that. All right, I'm gonna hop off today. Thank you, Brian and Transient Stacker, for hopping on the stream today. I appreciate it. Everyone else,